Hello there. Thank you for joining us for our live webinar on Nikkei 225, Rising Sun or Setting Phase. This is Phil Gan, your presenter for today. We'll be starting the session proper at about 7:02 p.m. Let's give a couple of minutes for our friends to join us. Meanwhile, you can take a look at the ongoing promotions or sign up for a demo Nova account using the QR code on the left here. See you later. Good evening, everyone. Thank you for joining us for our live webinar on Nikkei 225, Rising Sun or Setting Phase. This is Phil Gunn. I'm a Senior Sales Manager with Phillip Nova. In today's webinar, we'll be discussing on SGX Nikkei 225 futures and also on the outlook on Nikkei. Before we begin, I would like to do a sound check. If you can hear me, just type yes into the question box. Also, during the webinar, if you have questions, do type them into the question box and I'll address them during the Q&A session at the end of the webinar. Okay, it looks like everyone can hear me clearly. So let's begin tonight's webinar. My name is Phil Gunn, the speaker for this webinar, and I have been with Phillip Nova for 15 years now since 2008. I hold a dual license in futures and stocks, and I'm an account manager to help clients trading in futures and forex, as well as with understanding the product and market by providing coaching and economic information to make proper trading decisions. There are some ways to participate in the Japan stock market. You can do so via CFDs or through the SGX Nikkei futures. The Nikkei has recently made a new breakout, and this presents an opportunity of a trending market trade. The Nikkei 225 futures is a perfect tool for a long-term trade which you can consider over its counterparts. In this webinar, we'll be looking at the pros and cons of SGX Nikkei 225 futures and have an understanding on the contract. At the end, we will also discuss on the fundamentals and technical outlook of Nikkei. Throughout the webinar, you may have questions. Feel free to post them in the question box. My facilitator will arrange them and let me know, and I'll answer them during the end of the webinar. This webinar itself will also be put up on the YouTube after today for you to revisit if you wish to do so. Okay, let's get right into it. Before we start, just a disclaimer for the webinar today. Materials provided here is for general information and does not constitute or recommendation or solicitation to trade. Alright, let's take a look at the contents for today's webinar. First of all, we'll look at what is the SGX Nikkei 225 index futures. We'll explore the contract specifications as well as understand the mechanics of trading Nikkei 225. Looking at the characteristics of Nikkei 225 and how you can use Nikkei 225 to trade on the index. Next, we'll move on the calculation of trades where we share some examples of making a positive trade, a negative trade, and so on. After understanding how to trade the Nikkei, we look at the reasons why people actually use Nikkei to trade the index and compare it to other counterparts like the CFD. At the end of the webinar, we'll be looking at the correlation between dollar yen and Nikkei and also the outlook on Nikkei moving forward for the rest of the year. And what are the strategies that you could probably adopt when trading the index itself? Okay, let's get started. So, what is SGX Nikkei 225 Index Futures? This index futures was launched in 1986. The SGX Yen Nikkei Index Futures made history as the first equity index futures contract in Asia, and as the world's first future contract based on the Japanese stock market. Today, the SGX Yen Nikkei 225 Index Futures remains the dominant offshore Nikkei market during the Asian trading hours. Index futures are contracts to buy or sell a financial index, such as the Nikkei 225, at a set price today, and it is settled in the future. These contracts are initially meant only for institutional investors, but have been open for decades to anyone to trade. Index futures are contracts to buy or sell a financial index at a set price today and settled in the future. The SGX Nikkei 225 Index Futures is structured to track the performance of Nikkei 225 Index, which has been the leading index of Japan's top 225 companies traded on the Tokyo Stock Exchange. The Nikkei 225 reflects the state of the Japanese global economy in a highly sensitive manner, as it is comprised of representatives of the major industrial sectors, such as Toyota and Sony. The constituents of the index itself are chosen from the stocks actively traded in the market and include, in addition to the traditional large stocks, fast-growing companies such as Fast Retailing, the provider of the Uniqlo brand, or SoftBank Group, which actively invests in companies, especially in the internet industry. Since the Tokyo market opens the earliest among major stock markets, the Nikkei 225 reacts to global events in the world first in hand. Portfolio managers also use the index futures to hedge their equity positions against a loss in their stocks portfolio. Although initially it is meant for institutional investors, nowadays it has been used by retail investors as a tool to speculate the Japanese stock market or to actually hedge against the market itself. Through the index, this offers investors a reliable view of the market sentiment. Over here, we look at the composition of the Nikkei 225 index sector composition. The Nikkei 225 index has been historically dominated by the technology sector. Over the past 15 years, the technology sector has constituted over 40% of the index. Currently, it's representing over 50% of the index. This surpasses the actual sector that dominates the S&P 500's technology weightage of only about 30%. Over here, you can see the spread of the top 10 companies in the Nikkei 225 index in terms of weightage. Semiconductor-related companies like Tokyo Electron, Advantest Corporation, and Shimizu Chemical have largely overtaken the electric machinery manufacturers. This shift reflects the growing importance of semiconductors in today's world. This is mirrored in the explosive growth of the nature of the semiconductor material and equipment makers in Japan, as these chips are widely used in a lot of industries such as the electric car industry. As the chips become more complex, demand for more advanced production equipment will rise, a demand that Japan's semiconductor industry is well equipped to meet. So let's move on to understand more about the Nikkei 225 and how to go about trading the Nikkei 225 index futures. So consider you wish to invest in the Nikkei 225 index. You can buy one contract size of the Nikkei 225 index futures. The index initial margin for one contract is in yen, about 935,000 yen. This equates to about 7,900 Sing dollars. So simply by buying one Nikkei lot at 40,900 points, which is what is trading right now, a week ago, currently is even higher. The notional value is at about 20.45 million yen. But you do not need to come up with the full value, of course. Just by with a margin of 935,000 yen or about 7,900 Sing in account, you can start trading of one lot of Nikkei 225 standard size contract. So after that, if the contract index itself moves up to 40,950 points, you can then sell this contract at the notional value of 20,475,000 yen. This makes a profit of 25,000 yen. 25,000 yen is about 210 Sing dollars. Hence, you can buy this index and sell the index later when it rises at a profit. So let's take a look further into the characteristics of the Nikkei 225 futures. So there are actually two contract sizes available. We have the standard lot size, which requires a bigger margin of 935,000 yen. Right? If this contract is too big for you, you can go for the mini size contract, which is only 1/5 the size of the standard lot size contract. The mini size initial margin requires about 280,500 yen. In order to trade this contract, you need not come in with Japanese yen. You can actually come in with Sing dollars as well. You can also choose to convert the Sing into yen so as to avoid interest charges if you want to trade the index. Second point, the leverage is about 20 points. So as you can see, because you put up a margin, you do not come up with the full contract value. The amount of leverage is 20 times. And based on this financing, there is no financing charges implemented. Next, the Nikkei 225 futures is bidirectional market contract. So it allows you to short sell as well. Meaning to say, if you think that the index or the Japan market is at the end of its run and making a downturn or a correction, you can actually use the index futures to start selling first and buy back at a lower price for a profit. So this allows you to take opportunity of the market in both the bull market as well as the bear market. In terms of volatility in the market and of the political uncertainty in the world today, this serves as a good tool for you to be ready for a market-changing trend. Next, for each contract, it will be marked to market based on the exchange daily settlement price. So if you have entered one position of one Nikkei 225 futures, at the end of the day, they will mark this contract to the settlement price. If you have entered at a price lower than the settlement, higher than the settlement price, meaning to say you long the contract and the index actually goes down, a margin call will be triggered. So this is something that will be sent to you via email when there's a margin call. And you have up to 2 days to meet the margin call. Next, as you can see, the initial margin is in yen. So you can start a contract in Sing dollars, but you'll be charged interest on the yen itself. To avoid this, simply just convert your funds from Sing dollars to Japanese yen. As Phillip Nova account is actually a multi-currency account, you can easily change this currency conversion using our Phillip Nova platform. And the conversion rate is very good compared to money changers, which gives a very wide spread. As Phillip also does other products such as Forex, the spread for the currency conversion is very tight. So besides that, the Nikkei 225 futures profit and loss will also be denominated in Japanese yen. So at the end of the day, when you close out the trade, you'll be having Japanese yen in the account and a conversion is required. So I'll go into deeper details on the calculation of trades later on. So lastly, this is also a quarterly contract. So Nikkei futures, 225 futures have the quarterly months that are actually active. They are the March contract, June, September, and December. Approaching the end of the month, which is the third Friday of each contract month, the contract will expire. This will cause you to close off the contract, or you can actually make a rollover to the next quarter month. So this has to be done manually on your side, and I will go into details on how this is achieved. So let's take a look what happens when the contract approaches the expiry date, since it's a quarterly contract. Upon expiry, investors can either roll over your position. This is done by simply executing a closure of a current position and opening a new position in the forward month. For example, if you have a position in the month of September currently, approaching the third Friday of September, the contract is starting to expire, and you can close off the contract for September. If you decide to hold a position continuously, thinking the market continue to rally, you can go ahead and purchase a position in the December contract, which is the next available month. So this process of closing the current month and opening a new month in the forward month contract is the rollover of position, and it has to be done manually. The second option you can have upon expiry is to actually just close the position, realizing the profit or the loss in the contract. In both scenarios, since the position in the current month is closed, investors will realize both the profit or the loss depending on the direction of market upon expiry. If you do not do anything and no action is done, the positions will be closed by the exchange based on the settlement price. So meaning to say, the exchange will actually carry out the closure for you, not Phillip Nova, and this settlement price will be actually broadcasted on the website itself. Not to worry, a reminder will be sent via email a week prior to the expiry date. If you have me as your servicing AE, I will also drop you a WhatsApp message to remind you of the approaching expiry. Let's look into the contract specifications listed on the Nikkei 225 index futures on the SGX website. So this is the standard lot size contract size. The standard lot size contract size is 500 yen times the Nikkei 225 index futures price. So currently, the Nikkei is trading at about 42,500 at its peak, recent peak. So the contract value that you are investing in one lot is 500 yen times 42,500 yen. The minimum fluctuation price is 5 index points. So per movement per tick is 5 points. And that gives you 2,500 yen for this 5 points of per tick movement. So if you think this contract is too big for you, there's a smaller size contract, which is the E-mini Nikkei 225 index futures. You can do 1/5 of this contract size. But the expiry is the same, and this is a quarterly month contract for both the E-mini and the standard lot size. And for both these contracts, they are actually cash settled. As mentioned, the last trading day is the second Friday of the contract month itself. All right, now let's take a look at the calculation of some trades. on the Nikkei 225. Over here, you can see the bid and offer price of the Nikkei, SGX Nikkei 225 futures. As you can see, the spread is just one tick of 5 points. The bid price is 41240 and the ready ask price is 41245. Let's take a look at one contract size of a standard lot size. The initial margin required is 935,000 yen, which is 20 times leverage. So with this amount of funds in the account, you can actually start trading for one lot size, or you can actually have the equivalent of these in Sing dollars. So the smallest tick 5 points is equals to 2,500 yen movement. So with this in mind, let's assume we buy one lot of Nikkei 225 at market at 41,245 points. And then the market continues to rise. At the end of the day, before the market closes, we sell the Nikkei back at 41,345. As you can see here, the increment over here is 100 points by doing a simple subtraction. And the 100 points, since 5 points is 2,500 yen, 100 points movement will be 50,000 yen. So in the account, you'll be seeing the value of 935,000 yen, which you already have as your initial funds, plus the 50,000 yen, making a total of 985,000 yen in the account. So, of course, there's a commission for the trades itself. So for the round trade or buy and sell, currently there's a promotion that goes until the year end, and the cost for this trade will only be US $2.50. So that is an example of a profitable trade. Let's take a look at an example of a loss trade. So in using the same standard lot size contract, we have the same initial margin required of 935,000 yen. But this time, instead of the exact funds of 935,000, we have excess funds. We have 1,000,000 yen in the trading account, having an excess of 65,000 yen. Okay, so more than enough to start one contract size. And similarly, we buy one lot of Nikkei at the index, and it's at 41,245. However, we did not close off this contract, as the market itself has gone down at the end of the day. And as mentioned, we actually mark the contract to the settlement price released by the exchange every day. So if the settlement price is lower at 41,145, this means the index has actually lost off, your position has lost actually 100 points in movement. And this equates to 50,000 yen unrealized loss. This is unrealized loss because you have not closed out the position. So in your account, since you have 1,000,000 yen funds, minus off 50,000 yen, you're left with 950,000 yen. Take note that 950,000 yen is still more than the required initial margin of 935,000 yen. So in this case, there is no margin call and you can still maintain your position. So having excess funds to tide over volatility in the market is a good choice when trading this futures contract to avoid regular top-up of the account. Well, lastly, let's take a look when the case of a margin call is triggered. So in this example, we once again have 1,000,000 yen in the account with excess of 65,000 yen. However, this time we buy the Nikkei at 41,245. At the end of the day, marked to the settlement price, there was a drop of 200 points and the index lands at 41,045. So this means that the account is sitting on an unrealized loss of 100,000 yen this time. And after the unrealized loss, the amount of funds remaining in the account is 900,000 yen. This time, this is less than the margin required of 935,000 yen. Hence, a margin call is triggered and a top-up is required to top up the account back to the initial margin level, which is 35,000 yen top-up. You will have 2 days to do the top-up. So at the end of the 2 days, if the market is still the account is still in deficit, the position will be liquidated. However, within these 2 days, the market can also turn around back into positive, then no top up will be required. So this is the scenario for a margin call top up. And as mentioned, usually we have certain excess funds to tide over this movement in the market. Okay, I hope you are following so far on the calculation of trades. Next, we'll move on to what's the reason for trading the Nikkei 225 futures. First, on diversification. The Nikkei 225 index offers investors a high degree of diversification, as it draws from multiple different sectors. Thus, there's relatively lower volatility, as advances in winning sectors can help make up for losses in other sectors. In addition, the Nikkei is a good representation of the overall Japanese economy, lending itself well into the recovering country or the region-based portfolio composition. Meaning to say, if you are interested in the Japan market and want to take opportunity of the boom in the Japanese market as well, the index itself, Nikkei 225 index through the futures, offers you the diversification. Next, the futures, Nikkei 225 futures allow you to take on both the long and short positions. This means that you don't have to wait for the index to rise in order to make a profit. You can also take a short position to profit when the index falls. Lower barrier to entry. Nikkei 225 has a comparatively lower barrier to entry. You can start trading the Nikkei with less capital compared to buying individual shares of the index funds that track the Nikkei. Leverage. Nikkei 225 futures offers trades on a leverage of about 20 times, which will increase your gains if the trade goes in your favor. However, using leverage will also increase your losses if the trade goes against you. So, leverage should be used with caution. As there's two types of contract sizes available, you can start off with the E-mini Nikkei 225 before going on to the standard size. So over here, what are the other options available besides the futures to trade on the Nikkei 225? You may have heard of CFDs on index also. So let's take a look at the differences between futures and using CFDs to trade the Nikkei 225. So first of all, let's take a look on how they are traded. Futures are traded on exchanges. The exchanges is a marketplace where it's transparent on the transaction of trades. So these exchanges are highly regulated to ensure the quality of products and the smooth transition of the cash settlement of the contracts between the parties. So in other words, the exchange guarantees the counterparty will fulfill the requirement, reducing counterparty risk. We can say the counterparty risk is almost zero. There has been no instances where when you buy or sell through an exchange, you're not able to get your funds back. So for CFDs, it's traded over the counter. So for over-the-counter trades, it's between you and the broker or the trading provider. Meaning, say the counterparty is someone that provides the liquidity of the contract. This can also include other clients where the CFD provider conducts business with. So in times of volatility, the CFD provider can also pause the providing of this liquidity in the market and suspend the trading for a while. Unlike the exchange, of course, there is the circuit break rule, but normally the conduct of the trading itself continues even though there's a huge volatility in the market. Next, let's take a look at the asset classes they cover. So we are talking on the topic of index futures today, but for both futures and CFD, they also cover a wide spectrum of products including currencies, stock indices, commodities, and more. However, CFDs as an instrument for individual stocks, you can actually trade stocks as well using CFDs. Next, on contract sizes. In this aspect, the futures have very standard-sized lot sizes. In the Nikkei Index 225 futures, you have the standard lot size as well as the E-mini lot size. So these are the two lot sizes, and you can only trade in denomination of these lot sizes. So it's a little bit restricted, but for CFDs, they come in all flexible sizes, so you can trade quite to even smaller sizes, probably micro sizes as well. So this gives you more flexibility in contract sizes. For expiry, both contracts actually do expire, but the difference is for futures expiry, you have to do a manual rollover to a new position. Right, not to worry, because Phillip will actually remind you when it approaches the date. For CFDs, the rollover is done automatically and indefinitely. Well, so far you might think, in that case, CFD seems to be better in many aspects. However, one main aspect of it is the financing cost. For CFD, if you go for long-term positions, you will be aware that there will be a financing charge or an interest premium that is charged on long positions that help for long-term perspective overnight. So for long-term positions, CFDs are not that viable in terms of cost effectiveness. For futures, there's no financing cost at all, but there's an expiry. So if you are more of a long-term investor, futures probably would be more cost effective for you. So in terms of leverage, it's also slightly different. For futures contracts, the leverage component is typically higher, and this is advised by the exchanges. But for CFDs, for most of the contracts, is typically 10 to 20% for most of the contracts on stocks. So this is actually the comparison between futures and CFDs. Next, let's take a look at the advantages and disadvantages of Nikkei 225 index futures. So first of all, the advantages: liquidity. Nikkei 225 futures allows higher liquidity because it's transparent and investors can enter and exit positions with ease. There's a huge amount of transparency. All the trades on the exchange is available through the Bloomberg and documented. They are monitored, and information is also readily available on the exchange. Things like settlement price can be also obtained from their website. So the price is transparent. It's also a bi-directional market, meaning so you can provide opportunity to trade in both directions during a bull market or a bear market. Low or zero counterparty risk. The counterparty risk is guaranteed to be zero because all the trades are guaranteed by the exchange. The lower cost of trading. The cost of trading Nikkei futures is very low. As mentioned, to trade a standard lot size, a round trip for the proportional rate is only $2.50 USD. So of course, the amount of contracts you trade, you can multiply accordingly. So this is actually lower in comparison to buying actual Japan stocks. Just by simply buying a Japanese stock, the cost of the commission would be much higher than actually buying the index, which gives you more diversification. Of course, there are some disadvantages. One of the disadvantages is expiry, which the position has to be closed off manually, and the profit and loss will be realized when you close off the position. You can continue to roll over the position and maintain a long position if you wish to. And in the future, when the market turns and goes in your favor, you can actually take a profit again. Next, in terms of lot sizes, there's limited flexibility on choice of lot sizes, but this is manageable as we now have sizes catered to retailers as well. The E-mini Nikkei 225 size, retailers can also use that contract if the standard lot size is not to your appetite. So you can do in denomination of these contract sizes to fine-tune the amount exposure you wish to do. Next, currency risk. As mentioned, Nikkei 225 is actually denominated in Japanese yen. Profit loss is also calculated in Japanese yen. So you are actually subjected to exchange rate risk and when the currency weakens. Well, this scenario might be short-lived since now we are at the peak of the weakness of the Japanese yen, and recently that might, although there's a push for higher weaknesses, but the BOJ might be coming in to turn around the currency weakness to handle the situation. So in the future, there's a higher chance that the yen might be coming back stronger instead. All right. Next, we'll do an analysis of the fundamentals for Nikkei 225. We'll notice as was actually a correlation between the dollar yen and Nikkei 225. As seen in the chart below, which shows the Nikkei 225 index and the dollar yen. Despite rising yields due to interest rate differentials and carry trades, the yen continues to depreciate against the dollar. Although a depreciating currency previously helped the Nikkei 225 to climb to new record highs, it has also resulted in higher imported inflation, weighing on the consumption-related companies including retailers, pharmaceuticals, and private railways. This came as several business leaders expressed concerns about the yen's extended weakness. A survey conducted by Teikoku Data Bank on May 17 reported that 64% of firms surveyed said that the recent depreciation of the yen has eroded their profits, while just 7.7% saw a positive impact. Koji Shibata, the president of ANA Holdings, says that a more comfortable level for the dollar yen would be 125 to the dollar. Rival Japan Airlines president Mitsuko Totori said an exchange rate of about 130 to the dollar would be better for the airlines. So, in our opinion, the yen depreciation, once a key growth driver, now exerts downward pressure on the stock market through higher imported inflation. We know that the correlation between a weaker yen and a strong stock price index started turning flat once the yen depreciated past 155 to the dollar, as seen below in this screenshot over here. Taking into account the recent soft US CPI, we expect delayed BOJ rate hikes and delayed FOMC rate cuts to translate to an easing of yen depreciation measures, supporting a yen rebound, enabling the Japanese equities, particularly the domestic demand-linked stocks, to outperform in the second half of 2024, driving the next leg of the rally of the Nikkei index. In the meantime, we see any near-time weakness or pullback as an entry opportunity. Later on, we'll also take a look at a chart where the Nikkei is standing, as recently there has been some pullback. So the corporate governance reforms also provide some support for the Japanese equities over the medium to the long term. So as I mentioned, the Nikkei 225 is dominated by the technology sector. As seen in this breakdown on terms of weightage, we observe that semiconductor-related companies like the Tokyo Electron, Advantest Corporation, and Shimizu Chemical have largely overtaken electric machinery manufacturers such as Fanuc, which is a manufacturer of factory automation equipment, and Kyocera. This shift reflects the growing importance of semiconductors. This mirrors in the explosive growth of semiconductors material in Japan, and as the chips become more complex, the demand for more advanced production of equipment will rise, and the demand for Japanese semiconductor industry will be well equipped to meet this rise. We believe that the Nikkei 225 index substantial exposure to semiconductor-related companies puts it in a good position to benefit from the AI boom and a potential cyclical recovery in the overall semiconductor market. which has been grappling with inventory gluts. But the conditions have been improving. And another observation is that the increased weightage of the consumer goods and the transportation and utility sector over the past 15 years. Prominent companies in the consumer goods sector include fast retailing, owner of Uniqlo, the video game makers like Konami and Nintendo. Similarly, the transportation and utility sectors features companies like Japan Airlines and East Japan Railway Company. The return of inflation and wage growth could be beneficial for the consumer goods industry, as higher consumer purchasing power will allow companies to start raising prices instead of focusing on managing and cutting costs. Next, we'll look at the Nikkei 225 technical aspect of it. Over here, shown here is the daily chart for the Nikkei 225. As you can see, this has been an uptrend for a certain time now, mainly brought about by the weakening of the yen itself. So recently, after a consolidation, there's a breakout point at about 40,000 psychological barrier level. And after that, there has been a great move towards the 42,500 yen, which is an unprecedented the level in the history of the Nikkei itself. The last time it has ever been this high, close to this high of 40,000 was in 1980s. So the breakout at the 40,770 is historic, and there will be short-term volatility trading in this range between the 40,755 to 42,500. We believe that there's a retracement phase going on currently after hitting the resistance level of 42,500, and there will be a short-term volatile range in trading in between the range of 40,755 to 42,500. So deeper retracements can still occur, but the 38% Fibonacci retracement indicates the support is at 40,755, which concurs with the breakout level, which has turned from resistance to support level at the 40,770. This is likely the area of support for now, so likely to be supported at 40,755 to 40,770. However, short-term swing further down can still have a small chance of occurrence towards the next support level, 40,200. This will still be a healthy reinforcement of the psychology support level of the 40,000 mark. So meaning to say it will be consolidating above the 40,000 mark for now. After this phase of retracement, if the resistance at 42,500, which is the recent high, is retested, there's a likely chance of breakout of this resistance level and a further continuation of the uptrend. So current retracement actually provides an opportunity to enter the market from a resistance turn support perspective. Of course, a proper stop loss and risk management measures has to be adopted at the support level. Right, that covers the technical perspective of Nikkei 225. So next, we'll move on to talk about the Phillip Nova platform. Phillip Nova offers a one-stop platform to trade across multiple assets, including stocks, futures, and forex. You can trade on the go with our Nova trading app on your smartphone as well as on your PC desktop devices. And also, our charts are powered by TradingView, and you get access to 400 technical indicators with access to market depth, and also you can view liquidity and the trades for a particular price in the market easily. Most of all, there is no maintenance fees, and you can monitor your trades wherever you are, whenever you want. So sign up for the free live trading account now. It only takes a few minutes using your SingPass account. There is no minimum deposit required. If you sign up using the QR code below, you can also sign up for a free one-to-one coaching session. The course will be on technical analysis demonstrated with our Phillip Nova platform. I'm a dual license holder specializing in futures, forex, and stocks. You will also receive daily updates on economic data releases and technical advice via WhatsApp. On top of all that, our in-house analysts also email technical reports on suggested levels for your reference. This will be on the suggested entry and exit levels for consideration. It will be sent as daily trading highlights, showing directional views from a global research desk of the Trading Central. These are starting points for your own research to identify opportunities that make sense for you. The markets include indices from Dow Jones, Nasdaq, S&P 500, Nikkei of course, and also the FTSE China A50 and Singapore MSCI Index. Crude oil is also part of the Hang Seng Index, as well as the gold and silver. Next, for the fundamentals, we also have it covered with commentary reports to give you updates on economic news happening around the world. This will keep you updated on the latest economic news that might have a potential impact on the markets. This saves you the work of searching for all this news on the internet yourself. Hence, we provide both the fundamental and the technical aspects of trading information to you, and you can have a platform ready to enter the market whenever you are ready to do so. Besides the analysis report, you can also reach out to me with technical views on the trades as well. Currently, we are actually having a promotion of SGX Nikkei 225 Index Futures, which is the Fly to Japan promotion. We are giving away a pair of air tickets to Tokyo, Japan each month from the 10th of June till the 30th November 2024. But that's not all of it. You will enjoy the reduced commission of just 50 cents when you trade in the SGX Nikkei 225 Index Futures Standard Lot Size. So how does this work? So first of all, the promotions running are first the commission promotion. The SGX Nikkei 225 commission for a round trip is $1.25 US dollars for self-execution trades on the Phillip Nova platform. That's the first promotion. For the second, and the promotion period for this commission runs until the end of November, 30th of November this year. For the Fly to Japan campaign, you send win a pair of round trip ticket to Tokyo. So there'll be 6 pairs of such tickets. On every lucky draw day, the price for a pair of round trip flight to Tokyo is worth about Sing dollars, $2,000, and will be issued as a physical voucher. So the winner will collect the physical voucher from our company itself, Raffles City Town, and you can present how do you go about to earn chances to win this air ticket. For every buy and sell trade, including the closing of the position, is considered as one trade. So a buy and sell trade of the SGX Nikkei 225 futures is considered one lot traded. 5 such lots traded will be granted one lucky draw chance. So at the end of every month, we divide the number of trades that you have executed by 5, and that will consider the number of chances that you can for the Fly to Japan trip. So to participate in this, you can simply just open an account using the QR code over here. Take the opportunity of the promotion and you can sign up. But there's absolutely no platform fees or maintenance fees. But to participate in a promotion, you must use this QR code, and you must indicate the campaign code Fly to Japan under the section when you open the account. How do you know PA and PL? I'll be assisting you on your account matters if you have and you will have the dedicated servicing AE on your trading account. I look forward to onboarding you on this trading journey. Okay, thank you for attending so far, and we have now come to the Q&A session. Let's try to answer some questions. Okay, just a couple of questions. How much funds do I need to get started trading in the Nikkei? That depends on the contract size you're trading in. If you are actually looking at the standard lot size, the margin for the standard lot size is 930,500 yen. For the EMI size, which is 1/5 the contract size, is 280,500. In terms of Sing dollars, that's about 1,580 Sing for the mini and 7,940 regular lot size. Is the coaching free of charge? Yes, the coaching can be arranged at our office at Raffles City Tower, level 7. So just feel free to scan this later I'll show you the coaching link, QR code. You can scan it, and we can arrange to meet up at our Raffles City Tower, level 7 at a time that is convenient to you. All right, since there's no more other questions, so this is the QR code for the coaching. If you are interested, you can actually scan this QR code. That is all the time we have for today. Feel free to drop me a message if you have any questions. Then, thank you so much for being a wonderful audience for today's webinar. A link to the recording of the webinar will be made available later on in the follow-up email tomorrow. If you have any further queries on the webinar and want to get in touch, simply reply to our email and we'll get in touch with you. So this is Phil again, signing off. Have a good evening ahead.